So I was reading this report about foreign portfolio investment trends in India for the first 3 months of 2025, and it's like super interesting. Did you happen to catch any of it?
I did skim through something like that recently. What caught your eye in particular? Was there a sector that really stood out?
Well, the whole thing is fascinating, but the way things shifted within March itself was pretty wild. I mean, like from the first half to the second half, it was almost a complete turnaround for some sectors.
Ah, right. The intra-month comparison. It's like watching a financial tide change direction midstream, isn't it? Which sectors are we talking about here?
Okay, so like automobile and auto components went from a huge outflow of like 3,640 crore to an inflow of 776 crore. Capital goods did something similar. It's really quite impressive.
Wow, that is quite the shift. It sounds like investors collectively had a change of heart. What do you think drove that?
I wish I knew. Healthcare also flipped from like almost negative 2,049 crore to a positive 2,138 crore. So you see, lots of sectors went from negative to positive. What's up with that?
It's hard to say exactly without knowing the specific events of that period, but often it's a mix of factors: policy announcements, global cues, sector specific news, all influencing investor sentiment.
That makes sense. But like financial services, that was the craziest one. It went from an outflow to a massive inflow of over 17,585 crore in the second half of March. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Now, that's a headline grabbing shift. What was going on there?
I have no idea. Do you have any clue? I mean, what could cause such a massive turnaround in like 2 weeks?
It could be anything from a major regulatory change that favored the sector to a large foreign investment deal being finalized, like a big player making a strategic move.
Okay, so it's like one big player decides to, invest a ton, and everyone else is like, oh, maybe I should do that too.
Exactly. It's like a snowball effect. Now, not every sector saw such a positive shift, right?
True. Some sectors like IT and FMCG still had outflows, but even those were less severe in the second half.
Right. So even the sectors that didn't turn positive saw reduced selling pressure. It sounds like the overall market sentiment improved significantly as the month progressed.
Exactly. But oil, gas, and consumable fuels went the other way, with outflows increasing in the second half. Why do you think that is?
Well, that could be due to fluctuating global oil prices, changes in government policies related to the energy sector, or even shifts in investor preferences towards renewable energy sources.
Ah, that's a good point. So it's like, everyone else is doing better, but that one is doing bad.
Right, and that shows the importance of not painting everything with the same brush. Now, how did March compare to the previous months, January and February?
Oh, that's where it gets even more interesting. January was mostly outflows across the board, but February saw some improvement, and then March had a positive shift thanks to financial services mostly.
So, would you say there was a clear trend from January to March?
It's totally like January was rough, February was kind of getting better, and March was like, okay, we're turning things around.
It almost sounds like a financial recovery story unfolding in real time. Do you think it's sustainable?
Well, that's the million-dollar question, isn't it? I mean, financial services had a huge comeback, but IT faced heavy selling in March after being volatile in the previous months.
Volatility is the name of the game, isn't it? But it's interesting how different sectors behave so differently. Like, what about FMCG? You mentioned that earlier.
Oh, yeah, FMCG had consistently high outflows throughout the whole quarter, while oil and gas also had sustained outflows.
So some sectors just couldn't catch a break during that period. It probably depends a lot on consumer behavior and what's happening globally, right?
I guess so. On the flip side, sectors like capital goods, construction, healthcare, power, and realty showed a clear trend of improvement.
That's great to hear. It sounds like a broad-based recovery was underway, at least in some key areas.
Yeah, but telecom had a weird spike in February and then it went back down in March. What was that?
That's an interesting anomaly. Maybe a major deal or policy change specifically impacted the telecom sector that month? It's hard to say without digging deeper.
It really is. But what about metals and mining? They went from outflows to inflows in March. Is that just because everyone needs metal?
Not necessarily. It could be due to rising commodity prices, increased demand from specific industries, or even expectations of future growth in infrastructure projects.
So basically, the FPI trends are like a really complicated puzzle with a million different pieces, and everything affects everything else, right?
Absolutely. It's a complex interplay of global and local factors, constantly shifting investor sentiment and sector specific dynamics.
Wow, that's a lot to take in. Well, thanks for breaking that down. That was pretty interesting.
My pleasure. It's always good to dissect these trends and try to understand the underlying forces at play.
Exactly. Hey, if you're enjoying these deep dives into market trends, remember to like, share, and subscribe.
Absolutely. It's worth keeping an eye on these trends as they develop over time. What are your thoughts on these trends and how they might play out over the long term?